liquidity from the daily chart was my interest. But we also could just bump it and then go back up to internal range liquidity and premium. So I didn't feel confident just shorting right on 930. I mean, so far profile wise, we've not had a run above a 930. No due to swing above, taking out the smooth highs. We're coming down here and sweeping the other side of the 830 news. The problem with this is since it was such a quick, energetic move, we have now formed a decent amount of imbalances that as we climb back up, it may cause more high resistance. So if you want to reverse, typically we're going to see that low put in by maybe 945-ish. We take out previous day low and this sauce of liquidity and return it to premium, which I would be fine with. This higher imbalance is the one in premium. I took the current dealing range if you look at the 15-minute chart. Actually, it's going to be even further now. Even the one that started the 930 run, I'd be fine with that. That's in premium. This is also in premium 15-minute chart. Either we sweep it, come back up into ERL to IRL, or if there's a continuation entry given in premium, continuation back down into maybe AM session low. But I'm favoring going long, preferably now. I do actually want to check the ES daily chart really quickly. Okay, so we do have SMT there. So SMT there, 15-minute chart. I don't think we've taken that previous day low yet. Yep. So PDL is still intact. That's SMT. Now what you want to see is all of these gaps being used as inversion on the way up. So this one, we'll mark this one up first. And then I'm liking all these relative equal buy side inside the IRL. Like that's pretty solid. You do your time frame pairing too. We have a 15-minute imbalance. You want to see 1-minute consolidation. I'm liking that as original consolidation right in there. Don't worry about this. Just look at this range right in, basically in here. Current dealing range, we either retrace back into, this is a low. If we put in a high, where does the high need to be? At least up to maybe here. So I want to just trade through the SIBI, trade back down, fill this. But it needs to be, since there's no breaker present, what's the other preferred entry point? Well, it needs to be in a short-term discount if we're going long. So there has to be some sort of a dealing range formed. So in here, so we can also cycle time frames to see if there's anything. Down from the 5. We also have this inversion gap on the 5-minute. That's pretty juicy. 4-minute nothing, 3-minute nothing, 2-minute nothing, 1-minute. I don't see anything currently besides this one right here. So let's take a look at ES really quickly. All right, that's better price action. For value gap and discount, order block here, line up nicely with the, that's in discount now, so I like that more. But you know, don't have to get the lowest low. It's still a decent amount of room to run. Like 90 points, that's 2 weeks worth. Now, something you can always get better on is figuring out where to place stops and where to get entries that'll have the smallest stop loss. So yeah, you can use your low risk entry and have a 30-point stop loss, but if you can get in slightly later, maybe missing on some of the profitable parts of it, but then you can now use an order block to support price. Like if you were to enter here plus stop loss there, you have now an order block supporting it, plus this for value gap, plus this, plus the 5-minute gap. So you have a bunch of stuff that should hold your stop loss better than just a fair value gap. We're holding this imbalance pretty well. You may run short-term stops, tap into this order block, but I'm liking the fact that ES is holding their imbalance in there. We have pretty nice original consolidation up in here too. Could actually just go long right here and put the stop loss, just a hypothetical demo trade. Plenty of room there to run. 90 points up, so don't need to capture the entire thing. So watch how we reference this order block here. That's the last line of defense. That's why the stop is underneath it. So candle buy is going to have the most reaction, right? I would like to see this candle print bullishly, aggressively. Ran stops, internal range. Wow, okay. I mean, that's pretty healthy. Now, I would like also to close above this 10.01. This is pretty messy. I'm going to start removing some of this stuff. Like this rejection off the bearish order block is not what I'd want to see. I want it to close above this level here. even a target up to here, like this by itself, perfectly fine. Like how far is that? That's a good, what? Here to here, 45 points. You know what? We're going to take it there. I do think it'll still run up there, but for the teaching purposes. Now, I feel comfortable dragging stop to this low now. I have a tiny imbalance in here, which is why we're slowing down. Maybe wick it once and then go. There's a tiny imbalance up here too, which is why we stopped. This civvy efficiently filled. So really, I mean, in a best case scenario, we just run all the way through, maybe slowing down within this civvy. But we're going to see that this order block now hold, change the state of delivery. You can kind of see the market maker buy model forming in here too, right? Sell side of the curve and the buy side of the curve. Can also split this in half. It's a premium imbalance, so consequent encroachment of that is also a nice partial point, which would be at roughly 17,653.5. Nice run up, looking healthy. There's your aggressive run up. I told you that the balance was efficiently filled, right? So you want to see a movement like this. This is where I would feel comfortable dragging stop to BE. Now we're within that 5-minute imbalance too, so we just need to pop up one time. There you go. Market maker buy model done and dusted. Come on, man. Like, still reaching for that buy side, but W's. Just focus on the things that you're good at. And I'm not even saying, like, yeah, it was a win, but the framework was there. ES creates a nice second stage of distribution, able to capture that. And this is not a difficult thing. Like, the model that you're learning and the patience, exactly. Patience pays off so much. If you just know what you're looking for, waiting for the entry, stop loss also. I'm not even concerned with it running up to this. That was expected, and it's probably going to reach for this buy side, which we will miss, and doesn't matter. But the thing you should take away from this is two things: the entry time. So waiting for, obviously we're still within macro time, but waiting for ES to show it wanted to move. Second thing would be the stop loss. Like I said, right? You could have entered here, but then wherever the stop loss had to be, it would have to be a wider stop. So waiting for price to then allow for an entry point that provides a solid stop is where you're going to get some of the best entries. Let me extend these price levels out. Got a nice bounce off that too, pretty randomly, and then trades all the way up. I know it's a lot of annotations, but I think they're very necessary when you're first reading price. And what do you got? 40 points? Yeah, 46-ish point, 45 points. What is that? That's 80% of your week. Maybe that's your entire week, 40 to 50 points a week. This candle being an aggressive run up is not random. Fair value gaps are speed bumps. Okay. They're either going to impede price from moving higher, or it's going to be used as an entry point. This run up here and trade down, there's now complete buying and selling. So there's buying candles and selling candles all the way through the candle bodies, through this SIBI. So as price then comes through it again, it doesn't need to slow down anymore because there's been efficient delivery through that range. So then if you look back at, okay, why are we dipping into here? Probably we can cycle back. There you go. 4-minute fair value gap in here. Why did we come down into this? Because we now have a 4-minute fair value gap that needs both selling and buying through that range. 3-minute, nothing there. 2-minute. I mean, actually, you could use this imbalance in here too. But 2-minute, nothing much. 1-minute, obviously you saw. But look at that 4-minute imbalance. Draw that out. It's going to revert back into, and this is how also you can refine down your entries. Why are we going to enter in here when the order block it's going to revert to is down into here? And that's also in discount of the dealing range. So the way you can get good at tape reading is by thinking 1 to 2 steps ahead of what you want to see in price action. So if we're bullish, what do we need to see? Well, in the beginning, we're just looking for these inversion gaps to be treated as inversion. So we traded up through them, holding them, that's good. Same thing in here. After we tap this order block, we go back in price. There's 2 different ways you can think about it. Okay, so what do we want to see hold, and what do we want to see disrespected? That's the 2 questions you got to ask yourself. Well, hold, if there's nothing more left for it to respect, what are we going to disrespect? Well, we have a CISD point. That's where we're going to trade up, tap back into that. Fair value gap, trade up, tap back into that. Fair value gap, trade up, tap back into that. We also have this, technically you could call this a breaker, but we have an up closing candle range. If you extend this one out too, also technically changes state delivery, but also a old buying. I'm not going to explain that. There's a whole video on that. So, but anyways, as price closes above this range, even above this range, these are both levels of old buying. You're not going to see a candle body print below these levels after price closes above. So as price trades back down, closes above here, it's not going to print below this. Trades above this, it's not going to close. It can wick down into this level, but it's not going to close below. And if I go back into the regular, there, close above, wicks down, and the closures are staying there. Close above, doesn't even wick down to this level, and then it continues up. And there's your full premium balance met. So what is that? Sell side too? I mean, technically the IRL is up here. Still would like it to reach up into that, but ERL to IRL premium. Yesterday when I said it on stream of narrowing down your fair value gap entries to one of 2 things, either a breaker, so breaker plus fair value gap. Let me draw these 2 out. So the 2 entries that will save your butt a lot of times is these 2. So the reason we would not, if you're going long in both these scenarios, obviously you can flip it for short. But if you have a breaker, obviously we're taking out some form of sell side liquidity over here. We'll say it's previous day X. And there's a breaker up here. You don't need to drop into discount. So if there's a fair value gap that lines up with it, we don't need to drop into discount for us to see a valid entry. You probably would want to place your stop below the breaker here, or if there's another fair value gap that maybe lines up perfectly with it, you'd prefer to enter on that, but you'd have to place a stop below that level. Your best entry is going to happen right up here. Tap into this, tap into the breaker, and you'll see it fly. So this is where you would not want to see it trade most times into discount. The second entry you're going to be using is this entry here, where you have a fair value gap. You may have one up here, you may have one right here, and you may have one right here. You're going to be using this one. That is the preferred entry. So meaning if there is no breaker, if there is no inversion level to the left of it. So if there's not 3 PD rays over here, if there's 3 PD rays, if there's an order block, if there's a another fair value gap, a bunch of stuff over here that's cluttering the chart, and you want to extend that out, and now these gaps line up with it, that would be one thing. Like that may be an opportunity to enter before it actually reaches into a discount. But most times, 90% of the time, you're going to be waiting for it to drop into discount. You're going to disregard this fair value gap. If it tabs this fair value gap and leaves, no entry. Taps this one and leaves, no entry. If it comes down to this one, then you have place an entry here. Your stop should go below the fair value gap or / and below the order block. So if there's an order block here, so I drew this little thing. If there's an order block here, but the fair value gap, say the 3 candles, say there's 1 candle here, 3rd candle up here, last candle ends right here. You're normally taught to put your stop loss at the low end or high end of the fair value gap, which is like this. I'm going to give you an example. So this 1, 2, 3, you're normally going to place it below here. That's the bread and butter 2022 stop loss positioning, or it's going to be below the reversal point. That's the simple way to do it, right? So if you want to disregard what I'm saying, that's fine. That's the easy way to do it. The more intricate, advanced level, which you don't need to have, you don't need it, but if you want to refine down your stuff, then the stop loss has to go below the order block and below the 3rd candle, the fair value gap. So notice how in this scenario, this would be your normal stop, right? That candle you're entering there, normal stop here, probably would have been stopped out. It has to go below at least the candle body of the order block. I would say even below the entire order block there, which is where I placed it on the demo trade today. Hopefully it was insightful. This rally, by the way, is efficiently traded through, so you could actually see it just run speed all the way through. And, you know, post stream, it always likes to run to the target a couple minutes after. So maybe I'll end the stream here and we'll see that run up to the buy side. And I will see you guys tomorrow, Lord willing, for another stream. So stay safe. Take care. Peace. There you go. All from the jump. Let us see. And there's London session high. Come on. Thank you. There's nothing like this stuff, man. Nothing like it. You can't deny it. Every day, it's there. Every damn day. Call from what? Like literally from 9:39. It's gonna reach out this buy side. I'm not tooting my own horn. I'm just saying if for someone to deny that this stuff is how the market books, they're blatantly disregarding evidence that's in front of them and the precision that is there. Yeah, it just, you know, all the selling pressure just randomly stops right here. This is how the market books, and it will never stop. 90-point run. It was going to reach up into there. You don't need the entire thing, but damn, does it feel good to read price. It's a God-given gift. I give him all the glory. Jesus is Lord, and I appreciate for what he's done for me and the knowledge and insight he's given me. It just still blows my mind how precise this stuff is. And there's your 830 high too, taken out. It's like, man. Anyways, I'll wrap it up the recording there. Thanks for sticking around, and we'll see you guys tomorrow. Peace.